great day yesterday, depending on how you, I guess depending on how you look at it, depending on what side of the coin you're on. But lots of opportunity in the marketplace, and simple strategies continue to work. So it's important to look at the simple stuff that gives you a slight edge and just continue to exploit that. That's what we're looking for in every single trading system, trading platform, trading method that's out there. Is we're just looking for an edge, a slight edge. It doesn't have to be much, and you can manage your edge, obviously put through managing your entry and being patient, and then secondly, using good money management. The combination of those two things gives you the edge, and it just comes down to what criteria you want to apply to filter out the market to give you your best trading advantage. And we talk about some ways to do that, and there's going to be days when you don't trade, and there should be days that you don't trade, and there's going to be days where you trade and you follow your plan and you don't win. That's just part of it. So let's real quickly though, let's go ahead and get to it. I think I'm going to keep today short. I don't really have any sidebar things that I plan to talk about, so we're just going to run through the market very quickly, have a look at Forex, then over to futures, and over to crypto, and then let you guys go and just talk about some key levels and key areas that we might be trading from, and then we'll roll from there. So let's start it off by let's go over here first. News. Today's a interesting day. There's not a lot of news. In fact, there's really no news during the U.S. session, the regular trading hours today. So there's not anything that's coming up that's planned that would be a potentially high impact or even medium impact news event that might keep us away from any trades. So first things first, check to see what's happening in the market, right? After that, having a look quickly over here at the Forex side of things and looking at which currencies are moving, seeing if we have any opportunity out there to pair a strong currency against a weak currency. What's happening there with the marketplace. And unfortunately, I'm not really seeing a whole lot going on. We see some flat currencies here. We've got the Aussie and the New Zealand that really were strong currencies over the course of the last few hours now. Definitely during the London session. However, those aren't actively traded. Number one, right now, they are actively traded. I shouldn't say that, but their economies. There's not as much volume there right now. Firstly, secondly, they've already moved pretty much their entire range. If you look at those potential cross pairs that are formed by the Aussie and the New Zealand. So then the next thing to do would be to come down and look and see, okay, well, we also have the euro here that's a strong currency. Is there anything that we could pair the euro against? And the thing that really stands out, you've got the euro versus the yen or the euro versus the USD. However, when I look at that, let me pull up the euro yen over here real quickly. When I look at the euro yen, we do have some divergence, and it's definitely moving, and the euro is moving to strength, and we've got behind it we're seeing good. Well, let me make this bigger so you can actually see it. We've got a decent trend so the trend is up. We've also got good volume behind us, indicating that we want to continue buying with this move. However, it's moved 100 pips already, and the average is anywhere from 80, about 90 pips. The average is about 90 pips. Does it mean it can't move on? Yeah, it's continued to push on to create new highs over here as far as this intraday piece is going, and is pushing well beyond its range. However, what's the likelihood of that continuing? It certainly could, and it may go another 20 pips beyond that, and could maybe even have gotten profit. To me, I'd rather not be in it because I just don't feel like the likelihood of it continuing to move is as great. So, I'd avoid it. Same with the Euro USD. Look at the Euro USD. Its current range is about 73 pips, and the average is about 79 to 80. So, what's the likelihood of that continuing on to get us that 20 pips? If you're scalping or something, there's probably opportunity there. If you're just looking for a quick in and out, there might have been opportunity on that momentum move here. But for something like this breakout strategy that we're utilizing, where we want it to go another 20 pips beyond that entry point, looking at where it currently is and looking at that range, I don't really see the opportunity. So this is one of those times where we just kind of sit on our hands and we don't do anything. And maybe later into the day, there's some other pairing that might match up for us. Maybe there's a reversal that we could take advantage of. But that out of the gate breakout strategy, you can very clearly see there's just not a lot really going on for us to be able to take advantage of it. Now, it's funny as I'm saying that, that euro yen just continues to push on, and certainly might be one of those opportunities where it could have gone that full range. But we don't worry about what could have been. We're working in odds and probabilities, and everything that we do in trading comes down to working in odds and probabilities. We have to think of it just like a casino boss, right? The casino's not worried about the guy that sits down and wins 5 or 10 hands in a row. They're looking at their overall edge that they have and exploiting that through the bulk of their games and the bulk of their casino. It's the same thing that we're doing here when we're looking at trading. We give ourselves a slight edge by looking at things like current bias in the marketplace, trends, distance that things have currently moved, currency strength in this case, to see which currencies are actually moving. So if we find currencies that are moving, we compare them together, which gives us that edge to allow us to find a potential pair that has the opportunity to take us into profit. When looking at the forex market or the futures market, we're looking at that bias. We're looking at support or resistance levels. We're looking at breakouts from certain areas that give us that opportunity to have a little bit of an edge. And then we're using good money management behind that, which further gives us that advantage over that long term. But there's always going to be series of trades that we could do quote everything right. In that we followed our process, but the process doesn't mean we win every time. The process just says, hey, the right things are happening to give us a little bit of an edge. Once like I've said before, it's kind of a coin flip. Once you click the button, enter the trade, that's the last time you have control. At that point, the market either moves up or it moves down. You have no control over which way it's going to go. All the wringing of your hands and hoping and gripping the keyboard tightly or banging the mouse on the table, none of those things are going to change the direction of the trade. Anyway, let's get over here. Wow, that euro yen just really crashed on. Interesting. Well, hey, it is what it is. Over on the futures side of things, another big day yesterday. Pushing on, created another new high from our big dip down back here earlier. So continuing to really push on and showing strength. The 4-hour bias is long. The 30-minute bias continues to be long. I know a lot of folks are saying it's you keep hearing it. It's overbought. It's overbought. It's overbought. It's going to reverse. There's too much going on. With our current U.S. economy and ultimately world economies as well. There's just too much going on for this to continue moving up, yada, yada, yada. You have to remember, the market is not the economy. The market is not the economy. The market's going to do what the market's going to do, and you've got money being pumped in there from all over the place that's keeping this market up. At some point, is reality going to set in? Maybe. Hell, maybe not. I don't know. All that we can do is have a process and follow the process. That's all we can do. If your process is every day I'm going to come in and I'm going to hope for something different and I'm going to take a trade, that's counter to whatever the current trend is, okay, great. But at least limit your loss that you can take when you do that. Because at some point you're going to be right. At some point. All the people that were calling over the last 3.5 years for the market to crash, eventually were right. It wasn't driven by what they thought it was going to be driven by. It was driven by a virus. But eventually they were right. But just remember, people were calling a drop in the S&P since it hit 2,000 back in 2017. That's the top. It's going to go down. It didn't. So just be careful. Be careful about trying to call the tops on these things, and just follow a plan. Have a plan, follow the 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 plan. I don't know how many more times I could say that. Probably a lot. But anyway, so bias is long. 4-hour bias is long. 30-minute bias is long. I know it's scary to keep buying it up here, but until it tells us otherwise, we would continue to look for long opportunities. And at this point, we pushed to new. I'm doing kind of air quotes new highs. It's not really new highs, but it's new highs since the crash, right? We've printed new highs since we had the crash. And looking at that, we've pushed on. Now we had a resistance point that was kind of this 3060, 3065 area that we broke through in off hours, and now we're back at that level. We're back at that 3065. It would kind of be the top edge. 3060 would be that bottom edge. So we're kind of floating back down to that. And as we float back down to these key levels, that could be an opportunity for us to look to buy again if we're looking to buy off of bounce. Of course, you could wait and say, hey, well, if this cracks back above 3070, I'm going to buy a breakout of 3070 or 3075 up here. If we really push on past that high, I think being patient probably is the better way to go, and waiting for it to come back down a little bit. If it pushes through there, we've got 3050 is another level down here I don't have marked, but 3050 is another level we could be looking at to buy on a bounce at that area. Of course, we want to keep an eye on if we get some real momentum behind some sort of a pullback. We're still going to watch and see what that does to our bias. And again, I'm measuring my bias based on just some moving averages. Moving average cross. So short term and a long term is how I manage my bias. I look at that on a 4-hour, and if the green's above the red, I'm like, hey, we got a bias long. If the green's above the red in a 30-minute, they agree that we have a long bias. If one's flipped, like we've seen before on other instruments, then we don't worry about it because the biases are mixed. Crude, same thing. Exact same thing here in crude. 4-hour bias is long, 30-minute bias is long as well. Yesterday we talked about pullbacks down to that, we were over here when we were talking. I'm sorry, we were over here when we were talking. We talked about pullbacks, down to this resistance, previous resistance, now support level over here at 34.5. Came right down to 34.5 and pushed back up. The biases are still long. Again, same thing with crude. You hear folks calling the top again on crude. Just like folks were calling the bottom on the way down, and were wrong day over day over day over day over day, folks have been calling the top on crude. Because again, logically, there's not a lot of sense behind it. But it is what it is. We don't worry about what makes sense. Don't try to overthink the market. You just start applying logic to this stuff, you're going to drive yourself nuts because it's illogical. But that's always been the case. Keynesian theory, it says the markets can be illogical for longer than you can be solvent. Just remember that. Just remember it. Logic and common sense are out the window. It's a marketplace. It's going to do what it does. So don't overthink it. Just find something simple that gives you a quantifiable, methodical way to look at the market and do that. Gold, same thing. Gold over here. We finally flipped. Yesterday we had a mixed bias on gold. We flipped that over now, so the 4-hour bias is back long, and the 30-minute bias is long. In a bit of a channel over here, but 1748, 1750, which is up here, certainly key areas. If we look at a 30-minute, even down to 1745 area is kind of a bottom, but looking like some opportunity potentially once we get under regular trading hours with the U.S. to see things start to push again to that long side. So watching pretty closely on what's happening there, but kind of across the board. And that's interesting too, right? With gold, typically, we kind of see things, an inverse correlation between the S&P and gold, but both of those are pushing higher. So anyway, long bias across the board here on all of these. And it's a long bias until it isn't, right? It's a long bias until it isn't. So if you're trading with the trend, We're still looking to find buying opportunities there. Where's the opportunity? That depends on your trading plan. If you're looking at breakouts, you can look at where the channel is forming on a shorter term, look for a breakout of that channel. If you're looking at bounces, look at your key areas where you've developed support. You know, whatever was a previous resistance zone becomes a support zone, right? So look where we've got previous support and look to buy off of those levels if we get pullbacks. If you're looking at, you know, which the method I really like is that combination where if I'm in an upward trend, I'm looking for lower highs, lower lows, lower highs, lower lows, trending down my potential entry point on the tops of those previous candles, and then looking to enter and go from there. So there's a lot of different ways, and those are, that just scratches the tip of the iceberg of ways you can find entries. I mean, do whatever is comfortable for you. Just make sure you've got some quantifiable way of measuring what it is you're doing. Why are you doing it? For me, I lose money in the marketplace when I don't do that. When something creeps up and I get impulsive and I go, hey, man, this just happened. I'm going to take a trade because I think it's going to do this. And then I go, what the hell? Why did I do that? There's no quantifiable reason for why I made that decision, other than some little devil popped up on my shoulder and goes, poof, hey dude, enter a quick trade. Yeah, like what the heck? So recognizing those compulsions and ensuring that you take action to shut it down quickly if you don't have a quantifiable reason for being in it. But I mean, there is no quote right way to come at these markets. It's all about consistency. Find ways to consistently look at the market, and it should whatever you're looking at should give you a slight edge, right? Trading with the trend gives you a slight edge, but there's all sorts of ways to look at it. Reversion to mean reversion trading. You've got multiple days where your average is, I don't know, let's say 100 pips, or maybe it's 25 points or whatever it might be. You've got your average, right? And then maybe you have a couple of days where it's significantly lower. It's traded at 55 or 60% of what that average is. If it closed in a really tight range, there's a really good possibility that the next day it's going to break out of that range. You could just simply, it doesn't happen all the time, so you've got to be patient. But mean reversion trading is a great way to go. You just simply bracket in that small day range over here. Yeah, right there. Anyway, you just simply bracket in that smaller range and wait for it to move back to its typical average range. It's going to break out one way or the other. Just don't get tied to what it does. That's a super easy way to go. Trades don't happen all the time. Super easy way to go, though, to give yourself a quantifiable way to look at things. Some folks look at distance from different things. You could use VWAP. You could move. You could use the distance from a moving average. You could use, VWAP. It's just looking at volume weighted average price, and if you're above it, when it floats back down to it, you buy. If you're below it and floats back up to it, you sell. Super easy, quantifiable ways to look at the market. Bollinger Bands, Ichimoku Cloud. I mean, there's so many ways to go about it. None of them are the right way to do it. You just have to find consistency in applying it. There's an indicator for everything you could possibly think of out there. People have created indicators on indicators on indicators. And that's great because the markets are so unique. But they're none of them give you any more of an advantage than others. They're all looking at historical data. And even the ones that are predictive are not that great because they're only right about 50% of the time. Again, it's a coin flip. Once you enter that trade, all you're trying to do is give yourself a little bit of an advantage up front. A slight edge. So anyway, I could go down a rabbit hole with that stuff talking about predictive technologies because, realistically, when you look at things over that big long-term scale, the averages kind of shake themselves out. When you look at things on a really short-term basis, we can be predictive into the next few ticks, even up to the next couple of points on a really short-term basis. But longer term, anyway, it's a rabbit hole to go down. I was going off on a tangent. Let's go over here and have a look at the crypto markets. big rally yesterday here in crypto. Nice move on Bitcoin. Bitcoin broke out of its range. We were talking about that yesterday. It kind of been hitting its head at 9,600, just hitting its head. We talked about, if we had pulled back, down to 9,500 or even down to 94 down here, which is where our resistance or our support level was, that's a great spot to reload if you're looking to accumulate additional Bitcoin. And it really broke out hard yesterday. Cracked above 10,000, and that's a big number for Bitcoin. It's tested it. This is the third time we've tested Bitcoin in the last few months, right? It kind of a spike back here in late October, early November. Tested it a couple of times here in February. Tested it again back here in May, and then right now we've cracked above. So the key is staying above 10,000. It's been reversing off of this pretty hard the last few times. If Bitcoin can stay above 10,000, we could continue to see additional movement. And obviously, the movement with Bitcoin pulled Ethereum up as well. So ETH is pushing up into new areas. The next high level is 260. This 257, 260 area up here is our next high. Maybe a good spot to take some profit and wait for another pullback. For right now, long bias on both of these. If we pulled back to, let's say 240, that's kind of been establishing a new area up here that we could potentially look to accumulate a little bit more if you're an accumulation strategy, or you could look to take some profit and see if it floats back down. What we saw with cryptos and with metals and everything else, when the market fell apart in February, so did cryptos and so did metals. And that's largely because folks are taking money out of one in order to cover in another. There's a lot of institutional trading that's coming into crypto, which is causing some levels of market manipulation. It's also making it more susceptible to fluctuations and swings in other markets that didn't previously exist here. So it's an interesting landscape that's kind of changing a little bit. But still, same processes apply. We don't have to overthink it. Don't overthink it. Take that cerebral side out of things, and look at things very methodically, and just don't try to analyze too much about what or why or how things are happening. At the end of the day, it really doesn't matter. Just because it had a 500-point rip on Bitcoin, why it happened, so what? All we need to know is it broke out of a level we were looking at, and we take a trade. Did it come to a level where we wanted to take some profit? That's all we really have to worry about. If you overthink it, you're going to drive yourself nuts, because what drove the market on this move may not have driven it in the last move, and may not be the same driver on the next move. That's why people get so caught up with news. People will watch the news. A news event will come out and it'll be hugely positive, let's say, and people go, oh my gosh, that should drive the market to this, and it goes the totally opposite direction, and they can't figure out why. Well, the conditions around that event were different from the last one that happened. So don't get so caught up trying to figure out the whys. Why did this happen? Why did that happen? Why? You will go nuts, like me. No. So don't worry about the whys. Just worry about what's happening on your charts. Trade your plan. Have a plan and trade your plan. Have a plan and trade your plan. Have a plan and trade your plan. Right? I know I'm a broken record about it. It's the only way to be successful in trading. When you deviate from your plan, I know I do. When I deviate from the plan, I lose. I think every trader out there will tell you the same story. When they deviate from their plan, that's when the wheels come off. It's kind of like going off the road, when I drive my car on the track, if I deviate from the plan, I might have a 4 off, and then I'm done racing, So anyway, let's leave it there. You guys have a great day. We'll talk to you soon. If you don't have a plan, please just stop. Take a day, take 2 days, take a week. Develop a plan. It doesn't have to be complex, but just make sure it talks about what criteria you want to look at for your entry, what criteria you're going to use to manage your position size, what criteria you're going to use to manage the trade once you're in it, and what criteria you're going to use for making your exit. How are you going to act around news? What are you going to do with news? Are you going to trade during the news, before the news, after the news? Are you going to wait for news? If you're going to wait for the news to come out, how long after the news hits do you take a trade? Yada, yada, yada. It doesn't have to be super complex. Just kind of think through the different scenarios, write them down, have a checklist. That becomes your plan. And then stick to it.